Real Estate Talk Show with Sean Brooks. Today we have John Thomas from Primary Residential Mortgage, one of the best lenders in the country. And I'm not just saying that, you can look it up and see it. Welcome, John.
Thanks, Sean. Yeah, John Thomas, Primary Residential Mortgage. Pleasure to be on the show here with Sean today. So what are we going to be talking about today, Sean?
We're going to be talking about FHA mortgages.
Great.
Great topic, right?
Sure.
All right. So the first thing we want to talk about is, what is an FHA loan?
Great question. So FHA stands for Federal Housing Administration. So it's basically a loan that is insured by FHA. The loan is made through banks. You can't actually get a loan from FHA. They just insure it. We as the bank make the loans, and we just have to make sure we meet the guidelines that FHA has set up. And they're really set up to target first-time home buyers, even move-up buyers that may have some credit challenges. So it's kind of sitting out there for the people that don't necessarily fit in the small box of what's called a conventional loan.
Great, great. Good information. So what are the minimum credit requirements and minimum down payments?
Great question. So minimum credit requirements set by FHA, you can have a minimum of 500 FICO score of the middle score to apply. Now don't get that excited. It doesn't mean you automatically qualify. It just means you can apply. But if your score is 500 to 579, in order to even consider applying, you have to have a 10% down payment. So that means if you're buying a house for $200,000, you've got to put down 20. You have to have the $20,000 to put down. Now, if you don't have 10% down, then the minimum credit score to apply is a 580 or higher to do only 3.5% down. And FHA doesn't do anything less than 3.5% down. So on that $200,000 house, instead of needing 10%, which is 20 grand, you only need 3.5. You got a 580 or higher, which is 7,000. And again, we call that a qualifying credit score, but don't confuse that with your pre-approved for the loan. It just means green light, you can apply to see if you qualify.
Great, great. Are there any limits for the loan?
So there are loan limits, and they're determined by the minimum average sales price in each county. So for example, for Newcastle County, it's $2,500 is your max loan amount.
Okay.
Kent County is lower, and Sussex, they're in the $300,000.
Wow. Do you have to be a first-time home buyer to get that loan?
Great question. I get that all the time. You actually do not have to be a first-time home buyer. FHA loans have no first-time home buyer restrictions. They do have some restrictions on having more than one FHA loan at a time. So if you already have an FHA loan, you might not be able to get a second FHA loan unless you meet some very strict guidelines for having two together. Or you can simply sell the house with the FHA loan, and then you can get a new FHA loan.
Okay, great, great, great. Great information. Are there any income requirements?
Great question. Again, a lot of people think there's income restrictions on FHAs. There is none. Bill Gates could get an FHA loan. Now, where we get confusion is a lot of people doing FHA loans want to use maybe a down payment assistance because on that $200,000 house, they don't have that 3.5%, they don't have that $7,000. But it doesn't mean you can't buy a house. It means we just got to find what's called a down payment assistance program.
Okay.
Most of those programs would have an income restriction, but if you have your 3.5%, you want to get an FHA loan, you could make $500,000 a year.
Okay, with that, would you suggest what programs a buyer should use to like offset that with it?
Sure. So in terms of that, if there's no free lunch is what I say. There's always pros and cons. So for example, one of the big programs in Delaware is Delaware State Housing Authority has a Preferred Plus program where you can choose between 2 and 5% assistance. So if you took the 5%, that would give you your 3.5% down payment, and then you have an extra 1.5% left over for your closing costs. So when you buy a house, if we go back to that $200,000, that's what you're agreeing to pay the seller. But it's actually going to cost you maybe about $208,000.
Okay.
Because you got about $8,000 what we call closing costs. So to make you feel bad, if you're a first-time home buyer buying that house, you need your 3.5 down, which is 7. You need your closing costs, which is 8. So you would need a total of $15,000. Okay. Now before you turn the camera, turn the video off because you ain't got that money, well, that's where Sean and I would come and say, okay, so you don't have the 15. So let's look at the Preferred Plus, for example, to get you your 3.5%.
Okay.
And if we do the 5%, we actually got another 1.5 left over to go towards that 8,000. So we found a source of the 3.5 with the Preferred Plus. And now you, being an awesome agent, what are you going to do to make up the difference?
Go get that seller assist.
Cool. So he's going to negotiate. When you make that offer of $200, maybe we ask the seller to give back 6. So now of the 8,000, the seller's paying 6. You're getting a 3.5% down payment from the state of Delaware. There you go. You might need $2 grand to buy a house. So we got you from 15 down to $1,500 or $2,000 by using a combination of a down payment program. And that was just one example I gave you. There's other down payment programs that we can look at, and then you getting the seller to pay money towards the closing costs. So $1,500 down to $1,500 or $2,000 to buy a house.
Now you guys are finding out the secret behind what I do.
Right.
It's not really me. It's John and myself that actually makes that happen. And that's all discussed in advance. Now, let's talk about this. How much money do I need to actually buy a house? Like, you just went over a little bit.
Right, so you do have to, so that if we can get you with the down payment assistance and you can negotiate the seller to pay the closing costs, you don't get any of that money until the day of closing.
Okay.
But the challenge is you have to write some checks before you ever get to the closing table. So the first check they have to write, which you're going to do with them, is the deposit. So if I'm writing an offer, hey, Mr. Seller, I want to offer you $200,000 for that house, with you giving me back $6,000 until my closing costs, you're going to have to write a check that says I'm serious, minimum $500, let's say.
Correct.
So that makes it a legal contract. You give them the $500. Tomorrow, if you just say, hey, I'm just kidding, they get to keep your $500. That's what that money's for.
Right.
Then, if they accept your offer, they're going to put that $500 into the listing agent's account, the brokerage account, to hold it in escrow so the seller doesn't get it directly. And then you're going to have to go get home inspections done, because you want to make sure, that's like your insurance policy, to make sure there's nothing wrong with this house.
Correct.
Before you buy it. So that's about $500. So right there we're at $1,000. And then the FHA appraisal that we have to do, you have to pay ahead of time for that, because you got to pay the appraiser at the time. So that's about $550. So right there, cash in the bank, $1,550. You know, and in this case, if we got 6 from the seller and you're getting 3.5, you need a total of 2. You're going to spend $1,550 up front, and the remainder you would bring to the closing table.
And guys, did you catch that? It's $2,000. You can do, if you're going to rent and you're renting for, say, $2,500, it's a much better deal if you actually buy.
Hey, security deposit's $2,500. And then first month's rent.
Right.
$5,000.
Now, also, for you guys that have credit challenges, how do we handle those particular situations?
So we have a great partnership with a company that will do a review of the credit report with the client, tell them what needs to be done, and then offer their services as professionals to get that done, or the client can decide to do it themselves. If it's pretty bad, we do recommend a professional service, but they do that free consultation up front, and then they actually work on it for 30 days before they even charge you a dime. And then at that point, they've worked on it, showed some results, you pay what you agreed to pay, and they've got payment plans and different things, but and they update you every month, they track you, they follow up, and they just kind of march you along this plan to help improve your credit and get you to what the minimum score we need. Okay. For example, if we're doing the Delaware State Housing Authority program, the minimum score they have is a 620. So 580 was the minimum to get 3.5% down. But if you don't have the 3.5 and we need to put you in that Preferred Plus program, then we've got to get you to the 620 minimum.
Yeah. All right. So give us one person that you remember. Maybe it took 6 months, maybe, to get their credit.
I mean, it can take as little as 60 days to 2 years, depending on what's on there and what you have available. Like if you just filed a Chapter 7 bankruptcy, you've got to wait 2 years to get an FHA loan from the discharge date. Okay. But if it's just, hey, you got some small collections and high credit card balances, maybe just paying them down, and then they report next cycle, which could be 30 days, jumps your score up to 20 points we might need to hit the 620. But typical results is 3 to 6 months for most people to get their credit fixed, because it's usually a combination of maybe they don't have enough open credit that's good, so they got to wait for that to report, and then they may have some derogatory items that we have to dispute to try and get them deleted. So that's at least a 30-day process to 45-day, depending on when you catch it in the cycle of disputing. And then maybe what's left if you're settling a couple of bills, and that if you have the money to settle, great. If not, maybe you need a month to save up. So that's why each person is different, is dynamic, and it could be as little as 30 days or as long as 2 years, depending on what derogatory event might be on that credit. But even if it's 2 years, you still want to do the journey, because 2 years from now you become a homeowner, you stop paying someone else's mortgage, you start investing in your future. I always tell people this is the only investment opportunity you have where I'm not telling you to go find new money to invest. I'm telling you, take money you're already spending every month on rent and start investing that in your future and your real estate investment.
Like I said, if you can pay $1,200 for rent, you can actually buy a house.
Oh yeah, definitely.
Right?
You can buy a house.
So John had mentioned one thing that brought on another question: bankruptcy.
Sure.
Because I've ran into a few people that ran into bankruptcies, and it seems to be some myths out there. So how does the bankruptcy
Great.
thing?
So since we're talking about FHA, I'll go over with FHA. FHA, first of all, there's two types of personal bankruptcies we're going to see. There's the Chapter 7, which is your get out of jail free card. It wipes all of your debt out. So when you go to, if you qualify for that, the bankruptcy attorney, judge, once he's done, it's all wiped out, and then there's a discharge. You're out of the bankruptcy at that point. There's a 2-year wait period from that discharge date.
Okay.
Not the date you file the bankruptcy, the date it's discharged for Chapter 7.
Okay.
At the end of the 2 years, you're eligible to apply for an FHA loan. Now, the second type is, and again, the courts decide which type you're eligible for. It's a Chapter 13 bankruptcy, which is a payment plan.
Okay.
Now, that's where they look at your debts, negotiate, the judge says this is what you can pay, this is what each creditor's going to get. You go on a payment plan, you pay that one payment a month. Now, you can actually get an FHA loan after 1 year of on-time payments, still being in the Chapter 13. If you're still in it and you're making on-time payments for a year, the only extra step is we have to go to the court, to the judge, and get permission to open new credit. Because you're not allowed to open new credit in a Chapter 13 without permission from the bankruptcy court.
Oh, wow. I didn't know that. Actually.
Right. So Chapter 13, we just need 1 year on-time payments, permission from the judge to open the new credit.
Okay. And that's like you were talking about credit. Like when bankruptcy happens, how does it affect the person's credit?
Well, a lot of times their credit can go up because everything gets reported, including the bankruptcy, so it's no longer past due collections and stuff like that. So, it's only going to go up so much because what you then have to do is when the Chapter 7 is, you've got to right away reestablish new credit.
Okay.
Or it's only going to go up so much. So it's real important that you establish new credit. We recommend that with like a secured credit card because you probably won't get an unsecured card right after a bankruptcy.
Okay.
So a secured credit card, you give the bank $300. They give you a credit card with a $300 limit. They keep your $300 until you cancel the card.
Got you. See, I run into those challenges all the time, and a lot of times I'll just call John and say, "Hey, I got a client. I need you to talk to him because that's your specialty."
Right. We dig in and see what options we have. Now, outside of the FHA, we have a Fresh Start program, which is 1 day out of bankruptcy, short sale foreclosure. But you got, if you're 1 day out within 12 months of the event, you're going to need 15% down.
Gotcha.
So if you got the 15% down and you're 1 day out, you can do that Fresh Start program.
Great program.
Right. But if you don't have the 15% down, then we're looking at the wait period to go back to an FHA.
Okay. So you guys heard this, right? And this may be you. Instead of thinking I can't buy a house, why don't you just make the phone call? I can be reached at 302-285-9604. John?
Yep, 302-703-0727 or online, go to DelawareMortgageLoans.net. And even if you're just curious, I would say we've got monthly home buyer seminars every month. The next one we've got coming up here is February 15th, which is a Saturday. We're in Newark at the Christiana Hilton from 10 to noon. And then the 19th, which is a Wednesday, we're in Wilmington from 6 to 8 p.m. You can just call Sean. He'll get you registered for the next event.
Great. You guys see, you can get a house. And you might get a house very soon. You might get a house a little later. But don't give up. At least give us a call and let's try. Thank you for taking the time out and watching this video. Share, like, comment, call. I don't care what you do.
Subscribe. Right.
Subscribe.
Yeah. Have an amazing day, guys.
Thanks.